Peter McGuire is with us, Chief Market Strategist at FX Global Capital, joining us on a phone line from Sydney. Peter, thank you so much for joining us on Profit. Currency markets are very, very volatile right now. The euro seems to be reacting to concerns building up on Spain and also in Italy, whereas on the other hand, there seems to be a slight bit of risk aversion and safe haven currencies like yen are back in focus despite whatever efforts Bank of Japan has been bringing in to stem the tide as far as yen is concerned. So how do you see the situation panning out, both from euro, from the yen's perspective, and even from the dollar perspective?
Well, good morning, Achal, and thanks for inviting me on the show. Look, I think where we're sitting at the moment, I think I wouldn't be surprised to see further strengthening across that US dollar for the rest of the next probably 6 to 8 weeks. A little bit further out than that, it's hard to call. As far as euro is concerned, I only see one-way traffic, and I think we're just starting to go through that second wave now as far as Spain and then Portugal and Italy, and that'll happen this summer in the Northern Hemisphere. And then, of course, the next part is where Japan plays in government intervention for the yen. I think there'll be more central bank buying, and I think that the yen will come off against the US dollar, but probably strengthen against the euro.
Recommended strategies right now as far as currencies are concerned? What are you advising your clients?
Well, we're retail and we don't try and go too heavy as far as giving so much advice, but I think from the fundamental side, we'd have to say that the US dollar against the Australian dollar is there's more upside there for the US. Across as far as yen, probably, as I mentioned, it'll probably strengthen against the euro, but come off, I think, a little bit against the US dollar. And where we look at as far as the other trades, I think it's just it's a volatile time, and you've just got to be very careful where you put your stops.
Peter, just before I let you go, on the commodity front, crude, do you think the rally that we saw, which was the dominating factor after the LTRO, seems to be waning off? I mean, NYMEX is almost at 100, has actually come off quite sharply, built up in inventories, whether it's the geopolitical concerns easing off, Iranian issue easing off, or even the US dollar equation. So do you think perhaps we could see some more easing off as far as WTI and even Brent is concerned?
Yeah, I think so, Ashal. I think Brent's next target 115, WTI 97.5. I'm pretty sure that unless you see some dramatic upshift as far as geopolitical, that premium will come out. When you think about what Al Naomi said as far as production, the Saudis will just ratchet it up. Sanctions are yet to bite really heavily as far as Iran, so I think there's further downside as far as crude over the next 4 to 6 weeks, and I wouldn't be surprised we'll even take 95 out for WTI.
Peter, thank you so much for joining us this morning on Profit, giving us your perspective on the currency markets and also on the commodity market front.